Good. I
Yeah.
think we should move on to John Christensen now.
Okay.
John, are you ready? Can you share the screen?
Yep, ready and waiting. Here we go. And just bear with me a second. Can I begin by saying hello to my friend and colleague, Pierre Guinger. Lovely to see you here, Pierre. I hope you and your family are well. And greetings to everybody. It's always a pleasure to join you, join Thomas and Christian. I'm going to follow on from Christian, but I can just make a couple of comments. One of them to Harrison. Any estimates that I use here will be based on local tax rates. I'm only giving one, but it is based on real local tax rates. In the case of Enzo, if you want a good news story about what can be done at developing country level to tackle some of these problems, take a look at the website of an organization called Tax Inspectors Without Borders. And this is a great success story. It comes, believe it or not, out of Tax Justice Network. It's an international program organized by the United Nations Development Program and the OECD. And it involves a lot of South-South cooperation, really highly skilled professional tax inspectors going in to build capacity, particularly to tackle the really complex transfer mispricing cases and trade mispricing cases that Christian's been talking about. So there's a good news story there. And on the level of what can the rest of the world do, I certainly think that we need to keep the pressure on the Organization for Economic Cooperation and Development to get the rules right, because the problems stem from rules, some of which have been carried forward from the imperial and colonial era, particularly around the taxing of multinational companies, which protect the interests of the former imperial countries, including Britain, where I'm sitting. I'm based in London, and France and other European states and the United States. But these rules do not work in the interest of developing countries. So we've got to get the rules right. But I want to follow on from what Christian's been talking about by looking at tax havens through the lens of the people who operate these places. And in particular, the people we call the enablers, because none of these sophisticated financial transactions, profit shifting from developing countries or shifting large amounts of capital illicitly or illegally out of developing countries, none of this is possible without a global infrastructure of highly skilled, highly professional, very highly paid people, bankers, lawyers, accountants, and so on, who support and very often encourage their clients to engage in activities which are deeply harmful. Now, here you see the front page of I picked this up from the Mother Jones website a couple of days ago. Mother Jones have just published a fascinating article which provides one of those very rare peeks behind the veil into how financial professionals, particularly offshore financial professionals, actually operate in practice. This comes out of a gigantic leak. It is a huge leak of data that comes from the island of Jersey. And you heard earlier, not only do I come from Jersey, I was the head of the government economic service in Jersey for over a decade. So I was deeply embedded in the government of Jersey. And it's well known fact that I was a deep critic of Jersey's secrecy, poor regulation, and the fact that the island was riddled with professional crooks. And this scandal, which involves a company of company and trust administrators called La Hougue Financial Management Services. I'm not expecting you to read this in front of you, but this leak, amongst the documents that were recovered as a result of this leak, here you have something which you very seldom see in real life, because these things are not normally put down on paper. This is a menu to a client saying, these are all the ways in which we can help you to shift money and avoid paying tax and evade paying tax and hide what you're doing. As you see in the covering letter, they said we wouldn't want these papers to fall into the wrong hands. Well, they did fall into the wrong hands because they were leaked. But the fascinating thing is they were leaked to the police service in Jersey. And the police service should have investigated. They had 300 banking archive boxes full with close to 500,000 hard copy documents going back to the 1980s, showing extraordinary levels of criminality. Much of them involving clients from the United States, including, and this is a fascinating part of the story which has yet to be told. I'm working now with the Wall Street Journal and with other papers on this story, evidence of what happened to some of the money that disappeared as a result of the savings and loan scandals in the 1980s. Here we have the smoking gun evidence hidden in these 300 banking boxes. But what's fascinating about it is that the Jersey police force did nothing whatsoever. For 3 years, they've done nothing whatsoever with this. And it might be because the law firm that advised LaHogue Financial Services, which is called Ogier, O-G-I-E-R, which is a prominent member of the so-called offshore magic circle of law firms, the 10 biggest offshore law firms in the world. Some of their senior partners, lawyers, all of them, now head the island's judiciary. And the most senior partner, the one responsible for advising this company, heads the Jersey Police Federation. He's the chair, or he was until very recently. And another senior partner has become the senior judge in Jersey and the and the president of the island's assembly. So what you have here is almost a microcosm of what happens in the world of tax havens, which is a comprehensive capture of the regulatory authorities by financial professionals and legal professionals, a comprehensive capture of the police authorities, again by lawyers, judicial capture, and legislative capture. And this capture is not by some kind of hooligan element. This is not QAnon and its supporters that have captured the island's government. These are very, very senior financial professionals and legal professionals. And these are the people we're up against, not just in Jersey, but frankly across the world in virtually every struggle that we're involved in. So the Tax Justice Network, very quickly, there's our website, www.taxjustice.net. We're a network of mainly professional people, researchers, lawyers. I'm an economist, but also with accounting and forensic accounting and legal training. And we work with civil society to not only do deep investigations, but also to advise civil society on how to campaign for the kind of systemic changes that are needed to tackle the issues that Christians flagged up. Today I'm going to talk about who are the enablers, what are the tools they use to help their clients to shift huge sums of money and to evade and avoid and cheat on taxes. Importantly, how do they rationalize their behavior? Some of these people are extremely educated. They went, they go to Oxford, they go to Cambridge, they go to Yale, they go to Harvard, they go to the best top universities. They are the elites of countries across the world, and yet they are involved in activities which day in, day out are harming people across the world in very tangible ways. And how can we change the professional cultures? Because in Western democracies, professionals have very privileged statuses because we regard them as playing a part not just in advising their clients, but also promoting public interest. And if you've had a chance yet to read the paper that Thomas distributed to you, that I wrote a few years ago, you'll know that I undertook a study. I talked with some of the most senior partners of PricewaterhouseCoopers, KPMG, Ernst & Young, and Deloitte. I, by the way, used to work with Deloitte. And I had the chance to interview them in a very anonymized way. They spoke very frankly about their concerns for the profession and so on. And it's quite clear that even at the highest level within these companies, or especially at the highest levels, they are very deeply concerned about the way the professions have developed in the last 20 to 30 years, and the way in which neoliberalism has actually generated what I would describe as a moral economy of fraud. And this fraud has a huge cost. We here being the Tax Justice Network, we published a State of Tax Justice annual report just a couple of months ago. And in that report, we said countries are losing a total of 427 billion in tax each year to international corporate tax abuse and private tax evasion, costing countries altogether the equivalent of nearly 34 million nurses' annual salaries every year, or one nurse's annual salary every second. Now, I happen to know a lot of nurses who are struggling day in, day out. At 4 o'clock in the morning this morning, I heard my neighbor, who's a nurse, head off. Everything is iced up here, can't use cars, bloody hell. 4 o'clock in the morning, she set off 2 hours early to get to her hospital on time because she's covering the COVID emergency units. And this is the tangible cost of international tax abuse. So certainly I have always thought of professional people working in financial services as gatekeepers of capitalism. Accountants have duties of audit. Bankers are there they're supposed to safeguard and tackle anti-money laundering. Lawyers are supposed to represent justice. Company and trust. These are all very professional, highly trained, highly paid people, but they're supposed to bring some kind of integrity to their clients' works and monitor the integrity. And monitor the public interest that's being served. And they claim that they actually operate within a framework of ethics. Lawyers, for example, claim that they have ethical duties and they have ethical codes, and those codes tend to serving the interests not just of their clients, but of the consumers of legal services, the interests of justice, acting with integrity and honesty according to widely recognized moral principles. But then we have two enormous leaks coming out of law firms. One was the Panama Paper leaks. Another one was the Paradise Papers leaks. Panama came out of a company called Mossack Fonseca, a legal practice, originally Panamanian, but fairly global. And the second one came out of a company called Appleby, both of them members of the offshore magic law circle, in other words, very big players, both of them showing the ways in which lawyers were advising their clients on how to engage in criminal activities and unethical activities. So how do we square that with the ethical codes being promoted by the Law Society in London? In the case of accounting firms, the Institute of Chartered Accountants of England and Wales, which of course their principles, their codes, their ethical regulations apply to associations in many other countries around the world. They accept straight away a distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in the public interest. And yet, company after company seems to be engaged very actively in promoting, in devising, concocting, marketing tax avoidance schemes to their clients, which they know will cost countries around the world hundreds of billions every single year. So what are these codes of conduct worth if no one actually pays any attention to them? And I'm not just pinpointing those who are directly, those members of the professions who are directly involved in selling dodgy schemes, tax avoidance schemes, because unfortunately the rest of the profession, by and large, do nothing. They say nothing. They take no actions. And these are self-regulating professions. They depend upon their memberships to call the ones who act badly to account. It just doesn't happen. So I want to take you very briefly to my home island in Jersey. For those of you who don't know it, it's a tiny little island just off the French coast, but it is British, very closely associated, attached to the city of London. I went there to, oh dear, sorry about that. I went to Jersey in the mid-1980s to work undercover as an insider. I took up employment with Deloitte's in the Trust and Company Administration Division. And from working from within, I had access to their client files. Over a period of time, I worked on over 120 different clients. And in each case, I did a forensic analysis of what the clients were doing. And this is what I discovered. Oh, hello. My screen seems. Sorry, my screen seems to have frozen on me. Here we go. So this is what clients were doing. Some of them were insider trading, market rigging, avoiding disclosures of conflicts of interest, illicit arms trading, illicit political campaign donations, contract kickbacks, bribery, fraudulent invoicing, trade mispricing, evading creditors, and tax evasion. And it was quite clear that this is what they were doing, hiding behind offshore shell companies and offshore trusts. And yet none of the auditors, none of the partners within the practice, nobody was calling this out. They weren't filing suspicious transaction reports. They were doing nothing whatsoever, apart from billing their clients for extremely excessive fees. The fees they earned were enormous, precisely because the clients knew and they knew that the transactions that were being booked through these offshore companies were illegal and illicit. I'll give you one example. This example involves a major, now a super major oil company, which was the operator, the lead operator of an upstream oil production joint venture in the Niger Delta region. And this company had a subsidiary which I was responsible for administering. I've loosely hidden the identity of the company. That's not the real name, of course. But once a month, this company in Jersey would book an invoice for unspecified engineering consulting services to the Nigerian operator of this one well in one oil field. And the invoice would be for anywhere between $500,000 to $1.5 million. We just varied it every month to make it appear that it wasn't, it wasn't a fixed sum. And the money would come back to a bank account at Barclays Bank, by the way, in Jersey, and it would then be paid on to a Swiss bank account in the name of a trust set up in Bermuda. And that trust in Bermuda, acting on instructions from the trustees who were in Jersey, would then pass them on to shell companies set up in the British Virgin Islands. There were many more than 3 of these shell companies. I'm just using this kind of to illustrate the thing, but the sums involved were substantial. There were no engineering consulting services of any type being provided. This was just a way of stealing or looting money out of the Niger Delta operations and into the offshore shell companies of, well, who knows? I never knew who was behind, who were the real beneficial owners of those companies were. I can only guess that it might have been politicians in Nigeria or senior members of the Nigerian oil company, or they could have been senior members of the operating companies. But this money was frankly being looted. And that's just one well in one field in Nigeria. And this is a relatively unsophisticated scheme. But what I want to point out to you is that none of the professionals involved, the trustees, the lawyers, the accountants, the bankers, none of them were filing suspicious transaction reports. And you only have to look at this to know that's suspicious. So Christian mentioned the Panama Papers, and I talked about them a little bit about them earlier on. The Panama, you see, prior to Panama Papers, you know, the high-level authorities, including the International Monetary Fund and others, said, well, yeah, but you know, few bad apples, that doesn't make it systemic. And then the Panama Papers came out, and it was quite clear that it was systemic. It's a systemic problem involving lawyers, accountants, and other enablers who have abandoned any pretense of having an interest in serving public interest. The Panama Papers were leaked. This was a huge data leak to two journalists I've been working with for many years, based at Süddeutsche Zeitung in Germany. They're called Friedrich Obermeier and Bastian Obermeier. Interestingly, we trained them as part of our training program for journalists, for investigative journalists. And what they revealed, that these papers as a whole, was a culture of ignoring the criminal and illicit activities of their clients. And that pervades right the way through the business services sectors and through the financial services sector across the world. Hence, in the article here is an interview with me about the three monkeys culture, the see no evil, hear no evil, speak no evil culture of financial services and lawyers. And I think that is pervasive. It's endemic through the entire financial services world. And that was picked up also by the Senate Permanent Committee on Investigations when they looked at the enablers and the tools and the secrecy things that use. And what they flagged up was that these are not batch lead operators. These are some of the biggest banks, the biggest accounting firms, and the biggest law firms in the world. So the rot has gone right to the head of the fish. And they have an extraordinary toolbox of available to them, not just the offshore shell companies and discretionary and charitable trusts. I don't know, you can ask me questions about these things if you want to know more about what they are and how they're used. The bearer shares, which have largely been removed but are still used in Luxembourg. Flea clauses, which instruct lawyers and banks to move companies and to move trusts the moment they hear even the slightest whisper of an investigation. They shift it from one jurisdiction to another to block investigations. Redomiciliation clauses. All of these things is a massive toolbox available to lawyers to help their clients engage in criminal activity. And these are the things that we need to get rid of. Now I want to turn to the culture that we've been trying to tackle. Because if we go back 10 years, it was quite clear, and here you have a quote from a senior tax partner of Ernst & Young in Ireland: tax is a cost of doing business, so naturally a good manager will try to manage this cost and the risks associated with it. This is an essential part of good corporate governance. And you read that, it was quoted in the Times of London, not New York Times, but the London Times, and it sounds ever so reasonable till you stop and think about it for 10 seconds. Because actually, from an accounting and an economist's point of view, tax is not a cost of doing business. It's actually a distribution. And the profit and loss account shows it as a distribution alongside distributions to shareholders. So right from the first line, this senior tax partner, who knew exactly what he was saying, is trying to deceive the public. Naturally, a good manager will try to manage this cost and the risks associated with it. Well, the only risk associated with tax is you might actually have to pay some. So again, it sounds so reasonable till you start unpacking this. This is an essential part of good corporate governance. No, it is not, because actually you're introducing new risks, because the risk is that you might actually trigger a proper tax investigation, and that can lead to a huge fall in in the share value. Here's another quote, again from 10 years ago. It's quoted in the Guardian newspaper in London. No matter what legislation is in place, the accountants and lawyers will find a way around it. Rules are rules, but rules are meant to be broken. Now imagine if that was said by a young activist in the Black Lives Matter movement. You know, rules are rules, but rules are meant to be broken. I think a judge might take a pretty hard line on that one, but this was said by a professional accountant, and not just any professional accountant. He was a partner of the firm, and that in itself is shocking. And here's the conclusion, one of the conclusions coming out of the US Senate Permanent Subcommittee on Investigations. KPMG, one of the big four accounting firms, knowingly, purposefully, and willfully violated the federal tax shelter law. In other words, a professional company with privileged professional position in society deliberately broke the law because they knew it was profitable to break the law. Now, one of the things that I found from my own experience of working offshore and working within the financial services world is there's a code of silence, you know, an omerta, to use the mafia term, which applies, and it's an omerta that's very hard to break. I eventually became a whistleblower in my own right, and I've written about it. I wrote a chapter for a book about whistleblower protection, and my chapter was called Diary of a Traitor. And that kind of sums it up, because once I blew the whistle on criminal activities, I then was labeled a traitor. And that, again, I think is very indicative of the kind of culture that has developed within the financial services world and the legal world. It is essentially a mafia culture, and one which we need to address. Taken from the chapter which Thomas gave to you, this came from a very senior, in fact, one of the most senior partners of Ernst & Young International, EY International, they call themselves. Tax rules are meant to be broken and undermined. That seems to be the core philosophy and ethic. There is no reflexivity about how this hurts society and the state in the medium to long term. So here you have a tax partner of one of the big four companies saying, yeah, you know, it's quite clear that tax rules are being broken, and they're being broken by very privileged people who are not giving any thought to how this is impacting on society and the state. So, you know, an intelligent man, a very nice man, I thoroughly liked him, and his insights are that as a result of the pressures of neoliberalism and themselves being profit-maximizing companies, accounting firms have lost any sense of a moral or ethical compass. And they justify their behavior very often, in my experience, by citing a whole load of myths that are myths deeply embedded in neoliberalism. And one of them is, for example, here, tax avoidance is legal. And this one particularly annoys me because I hear this being picked up by journalists and commentators, either in newspapers or on television, all the time. And they say, well, Apple has paid virtually no tax in any country around the world through tax avoidance, but tax avoidance is legal, and therefore it's okay. But they cannot possibly say it's legal, because the only way of determining whether a tax avoidance scheme is legal or otherwise is to take it to a court and have it tested by the court. So it's not for journalists to prejudge a position taken by a court. And in practice, most of the tax avoidance schemes that I've seen been involved in investigating or been an advisor on investigation, most of them, in most cases, particularly in recent years, the courts have ruled against the avoidance schemes. And as far as I'm concerned, it's a weak excuse for any professional to use this But say, as an economist, it doesn't matter to me whether it's evasion or avoidance, because the outcome is still the same. We still have the salaries of 34 million nurses a year not being paid as a result of avoidance schemes. And a former Chancellor of the Exchequer in Britain, a guy called Tennis Healy, said the difference between tax avoidance and tax evasion is the thickness of a prison wall. In other words, tax evasion, if you're caught out, you go straight to prison. And if tax avoidance, you might not go straight to prison. But as far as I'm concerned, there's very little other difference otherwise. Another claim made by company directors and their enablers, the lawyers and the accountants and so on, is that directors have a fiduciary duty to maximize shareholder value, dividends to pay to shareholders, and the accrued value of shares, and therefore they must avoid tax. They are failing in their duties if they don't take every step possible to avoid paying tax. So I actually paid $2.5 grand for a legal opinion from a top law firm in London, from a top Queen's Counsel tax barrister, and he went through all the rulings, and in his opinion, which I paid for, an opinion is a legal document I can take up to court, he said there is no such legal duty. There is no possible way of construing a director's statutory duty being to promote a tax avoidance scheme. And when I then confronted the law firms, accounting firms, and every single company on the Financial Times Stock Exchange 100 top companies, the FTSE 100 companies, I sent a letter to them saying, here's our legal opinion. Do you agree or disagree? Not one of them disagreed, even though many of them had told me that it was their duty to avoid paying tax. So they'd been hiding behind a completely fictional duty for many years. Avoidance is risk-free. That seemed to be the case. But in one of the clips from The Price We Pay that Christian showed, you saw a parliamentary inquiry in London, and I was involved in that parliamentary inquiry. You saw the head of the Public Accounts Committee, Margaret Hodge, confronting the tax directors of Amazon and Google and others, saying, you know, we're not saying what you're doing is illegal, we are saying it's unethical. But actually, evidence leaked from PricewaterhouseCoopers to that committee of inquiry showed that PricewaterhouseCoopers was selling tax avoidance schemes to their clients when their own estimate was that those avoidance schemes had only a 25% chance of withstanding a legal challenge. In other words, if the scheme had been investigated by tax inspectors, there's a 75% chance that it would fail in front of the court. So there you go. So, but they were still going ahead selling these avoidance schemes to their clients, knowing that they were likely to fail. Now, the claim is that also that professionals always act within the law or with integrity. But here, this quote is taken from the blog of a very senior Queen's Counsel, a very prominent public official, a public person in Britain, Julian Morn, a quick Queen's Counsel and tax barrister. And he's saying, I have on my desk an opinion, a piece of formal tax advice from a prominent Queen's Counsel at the tax bar. In it, he expresses a view on the law that is so far removed from legal reality that I do not believe he can genuinely hold the view that he says he has. At best, he is incompetent, but at worst, he is criminally fraudulent. He is obtaining fees by deception. And this is not the first such opinion I have seen. Such pass my desk all the time. And I agree with Jolyon. I know him quite well. I see similar I'm not as kind as he is. At best, he is incompetent. I don't think this is incompetent. Senior tax barristers are not incompetent. They know exactly what they're doing. They are obtaining fees by deception, and they are criminally fraudulent. And another claim is that, another issue that we need to address, because I hear this a lot, or we used to hear it a lot, not so much these days, but certainly used to hear it a lot, that legal professionals cannot break client confidentiality. And that applies, they say, to all matters, including matters to do with money laundering, terrorist financing, etc., etc. But here you have a comment on legal privilege coming from the Financial Actions Task Force. And of course, they are the global body charged with tackling illicit financial flows. And they say it's quite clear that legal privilege does not apply to these areas, and so the lawyers simply cannot hide behind that. And the recommendations, but the recommendations are slightly undermined by this interpretive note, which says are not required to report suspicious transactions if the relevant information was obtained in circumstances where they are subject to professional secrecy or legal professional privilege. It is for each country to determine the matter that would fall under legal professional privilege or professional secrecy. And here I think we can identify a problem, because the problem is that different countries have different codes of legal privilege. And I think this is something that needs to be tidied up globally so that we have a consistency of understanding of how legal privilege applies or does not apply in the case of clients who are engaged in illegal financial transactions and tax avoidance. And in this, by the way, I'm going to share via Thomas, I'll share all these slides so you'll have access to all these slides. Why are law enforcers apparently unwilling to take on the enablers? Why are we not putting more pressure on lawyers and accountants and bankers to abide by public interest provisions and act more ethically? This is the opinion of the Financial Action Task Force, because of the inability to secure sufficient evidence to prove their complicit involvement in the money laundering schemes. Domestically, access to evidence may have been refused because claims to legal professional privilege or professional secrecy were upheld. Secondly, because they are likely to make useful cooperators, informants, and/or cooperating witnesses. And I think those are valid issues, but it also, I think, makes it so much clearer why whistleblowers and whistleblowing are so important in this area, because most of the inside information we've managed to get about the way that law firms and accounting firms and banks operate have come as a result of whistleblowers from the inside the service, and they need a special protection. So I'm going to round up now by making some recommendations for tackling the enablers. And the first recommendation is that professional associations, whether it's a law association, bar association, or accounting association, they need to provide much stronger members' guidelines, and they need to enforce those guidelines. If they wish to continue to hold self-regulatory powers, they must demonstrate that they are capable of enforcing the guidelines for their professionals, and if necessary, simply withdraw professional status from people who continue to fail to comply. We need to restrict professional client privilege to situations involving representation before a court of law, but require full compliance with statutory transaction reporting. In other words, it simply cannot any longer be acceptable that lawyers know that their clients are using structures which the lawyers have set up and which the lawyers administer, and then say, well, you know, a client attorney privilege prevents us from making a suspicious transaction report, which on something where we are actually responsible for the transaction. I mean, that's just nonsense. We need to place all tax-related court verdicts and tax rulings online and on online public record as a reputational deterrent. At the moment, far too many law firms are getting away with it because even though the court might have found against them and against their clients, the rulings are not being made public, so no one knows that it's such and such a law firm that was actually advising and supporting their clients and enabling their clients to make these transactions. There's nothing quite like a little bit of sunlight and transparency to make financial professionals behave better. And finally, the best regulations in the world are only as good as the compliance culture and the enforcement culture and the ability to enforce that backs up the legislation. And too many jurisdictions, Britain being first amongst equal amongst first, or first amongst equal, or whatever, they adopt laws, they put them on the statute book, and there's no way of enforcement because there's no capacity to enforce, and there's no capability, and indeed no willingness to enforce. And certainly as far as white collar crime is concerned, when someone is found with their trousers around their ankles, caught out in some gigantic fraud, too often the sanctions are minimal and serve no deterrent purposes. I think that if we're going to clean up the swamp, then we need to have much stronger deterrents, and far greater sanctions will send very strong messages very quickly across the professions. So there you have it. That's my my exploration of the world of the enablers. Christian has already mentioned this film, The Spider's Web, Britain's Second Empire. We go at some length, we explore the role of enablers and the culture of tax havens in that film. It's available on YouTube free of charge. So if you have a spare, I think it's about 90 minutes or so, do take a look. But I'd be very happy now to open up to questions, comments, challenges, or whatever.
Good. Thank you, John.
Hi, I have a question.
Yeah.
Real quick. Is the issue not even actually worse than you sort of alluded to, John, in the sense that a lot of these firms advise the judiciary on tax law and then advise their clients on how to avoid that tax law? I think, yeah, I don't know if there's any comment on that. And then the second question, which follows on from your last point, is like, and I don't know if we have time, but like historically speaking, what's like the brief history of this? It seems like pretty much all of the roots lie in Britain and sort of perhaps the end of the empire in the mid 20th century.
Yeah, thanks. Great questions. I mean, first of all, yes, it is much more egregious, and you're absolutely right. I mean, if you really want to get angry, and I think anger is not only justifiable, it's necessary to kind of fire us to make the necessary changes. Look at the way in which the UK government introduced the patent box facility, which was quite simply a way for companies, multinational companies, to use patents to book income from patents through the UK. KPMG was brought in as the consultant to shape that particular tax relief. KPMG not only shaped it, they steered it through Parliament, did a lot of lobbying around it, and promptly went out and sold it to their clients. and identified all the potential loopholes in the law which they'd just taken through Parliament in the UK, and they made a fortune from the consulting services setting up a law which was riddled with loopholes, and then they made even more fees from selling it to their clients. I mean, this is absolutely outrageous, and gives, I think, a sense of the unhappy relationships that exist between these professional services companies and governments. And let me now put my hat on as a former civil servant, a professional civil servant and head of a government economic advisory service. I was with the Treasury for a while. I felt very uncomfortable working, as I had to, with people seconded from the City of London into the Treasury and into other divisions, because it seemed, that they weren't required to abide by civil service professional codes of conduct, and in many cases they weren't declaring conflicts of interest, and they were abusing their position extensively. It had massively eroded the professional role of the civil service, having a constant rotation, revolving doors of people who don't have to abide by any kind of professional civil service code or public service code, and who bring these conflicts of interest. On the issue of the history is absolutely fascinating. It's a bit like starting to investigate, because I am also something of an economic historian. I've been looking at Britain's slaving economy and America's slaving economy for decades, and there are all sorts of similarities here. I mean, the tax haven economy actually goes back to before the end of the formal empire. It actually began, it's rooted in English common law, the provisions around companies, where companies are resident, where they have reporting duties and so on. So there's a very long history of Britain's involvement in tax havens, United States' involvement in tax havens. Most of the world's prominent tax havens are members of the Organization for Economic Cooperation and Development. And it's not a coincidence that after out of the Marshall Plan emerged an organization called the Organization for Economic Cooperation and Development, the OECD. And the OECD has taken upon itself the powers, well, not political powers, but the role of setting the rules for taxing multinational companies and the rules for cooperation between nation states. And a lot of our work at the Tax Justice Network has been around exposing the OECD's bias towards the interests of the former imperial powers. All the rules, all the current provisions for taxing multinational companies are biased towards what are called the capital exporting countries. In other words, the countries where the big multinational companies originate from. And that, of course, means the United States or the big European states and Japan. And they're all member states of the OECD. So this really is a case of a kind of neo-imperialism, and I wouldn't hesitate to describe this as a form of imperialism.
Yes.
I think if I can just add a comment, clearly, there's a big problem, particularly in the United States, where there's a major revolving door. All the members of the House Ways and Means Committee, where tax law originates, when people finish their terms, they often find jobs at law firms or accounting firms. Members of the Financial Services Committee in the House and the Senate Finance Committee, when they finish their terms, they find jobs in the financial service sector. And this kind of a revolving door is something that the public needs to be aware of and support politicians who want to put an end to it. No different than it's legal for congressmen and senators to invest in companies whose stock would be impacted by legislation that is being considered before Congress. they should not be allowed to do that. But currently, they have structured the laws to make it possible to do it. The public is not either sufficiently aware or not sufficiently alarmed about it, and it ends up doing a major disservice to the public interest. I think we had laws that clearly outlined what should and should not be done. For example, there were laws before that said that corporations could not buy back stock to boost the price. Those laws were repealed in the Reagan administration and in other, even Democratic administration in the Clinton era. There were laws against excessive compensation. Those again were repealed. So I think this is where we need a public that is more informed and engaged about laws that are in the public interest rather than in the politician's interest. And that's where I think events like these and young people who are informed about what the shortcomings are in these laws, what the fault lines are in the global tax architecture is very important.
Christian, thanks for that comment. I would say that what you've described in the United States, I think applies equally in the United Kingdom and in many European countries. So this seems to me to have become a common problem. But I'd like just a quick note of history, since I'm talking to an audience that have connection to the United States at the moment. I'm talking to you from a little market town called Chesham, just west of London. Christian has visited me here in Chesham. Chesham's most famous family was the Lowndes family, and William Lowndes was the Chancellor of the Exchequer that introduced, before the American Wars of Independence, introduced the Ways and Means Committee into what was not at that stage the United States, but the colonies, precisely in order to create the tax policies. So the Ways and Means Committees originates from the little market town I'm sitting in at the moment. There's a little historical note there. We English are very deeply rooted in our history. So, any more questions?
I have a small question about the enablers. This whole profession or set of professions, do we have any kind of sense of how expensive that is to the world? How much of a burden it is, quite apart from all the intelligence? You mentioned that some of the best and the brightest people go into that profession, and all they do is basically siphon off money for corporations and their shareholders. So the gain that we would get by trying to curb this industry would not only be that taxes would be more justly paid, but also that this whole profession, or most of it, would disappear. It would no longer be a deadweight loss on the world economy.
Yep. I think the short answer to your question is no, we don't really have an estimate of this, but I think you're absolutely right to look at it not just in terms of lost revenue, but here we have some of the brightest people going through the top law schools, the top universities, getting amazing degrees. They really are. You do have to be extremely well qualified to get in at that level. Just think how much better the world would be if they were using their brain power to, amongst other things, find cures to COVID, or how to financially support the transition away from fossil fuels to a more sustainable, renewable energy industry. In other words, there's a massive loss. But there's something also very intangible, because it imposes long-term costs on society, which, in my mind, it's not so difficult to join the dots between that moment on the 6th of January, when democracy in the United States almost collapsed, because there is a complete loss of confidence across so many people in the nature of democracy in the US and here in Britain. We're facing multiple crises at the moment, and one of the crises is a crisis of trust. And I think and certainly I've had that not only from my discussions with the most senior professionals who accept there is a crisis of confidence and a crisis of trust, but also amongst a wider public who think that our institutions, so many of the institutions here in Britain and in the United States, are totally corrupted now because of this failure of the professionals. So I think it runs, that cost you talk about, Thomas, is a very profound, deep cost, and it's going to take a long time to re-establish public confidence. I have it on public record. I have very little confidence in the ability of the Law Society in Britain or the Institute of the Institute of Chartered Accountants of England and Wales to actually remedy this, because they are captured by the perps, the perpetrators. So we do need not just minor reforms, we need a transformation of the professions.
The costs, of course, go far beyond financial cost. You know, the cost you were talking about is really cost, political cost in terms of human capital, you might say.
Yes, and I think this loss of trust, this loss of confidence has now fed through to such an extent that the public, certainly in Britain, I mean, when you kind of dig deep into what caused that extraordinary Brexit moment, amongst other things, there's a complete loss of trust in democracy.
Good. I'm afraid we are out of time. Is there any last question, comment? Then we leave it here and see you all again a week from now. And many, many thanks to John and Christian for their excellent presentations, and to you all for your comments and questions.
Pleasure. Thanks, Thomas.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.